Hello, everyone. I have the pleasure of having with me Mr. Ashish Marotra, who is the Managing Director and Group CEO of Northern Arc Capital Limited. Welcome, Ashish ji. Thank you for joining us. And with me on my right is Mr. Puneet Taneja, who is the National Manager Digital for Hero Housing Finance. Welcome, Puneet. So it's the last panel of the day, and the topic is Synergies for Success, Exploring Effective Partnerships and Collaborations between NBFCs and Fintech Companies. So let me request Ashish to give your initial thoughts on this, please.
What?
This is about exploring effective partnerships and collaborations between NBFCs and Fintech.
Okay, good. Good evening, good afternoon, everyone. I think delighted to be here. I can genuinely sense, since it's the last panel, you guys had too much. There is very little for us to add from all the esteemed speakers you would have heard before. But let's just try and put it in context where we stand today. 2024 couldn't be better time. India's marching towards 5 trillion economy. Correct. We are the fastest growing economy. If you cut it in any of the way, the tailwinds are fairly strong. But one thing which gives you a sense of the huge opportunity which exists in this landscape, and the way to look at that opportunity is that, your total credit demand is about 187 trillion INR, which is about 60% of country's GDP. And you compare it to whether the large economies in the world, or if you compare it to anywhere else, so there is a massive credit gap. This means for the growth of market and to ensure we are able to provide access to credit, especially to underserved, underbanked, and to the large community as a large, there is a massive opportunity, which in a sense reflects in the growth rates is what we are seeing. The second big piece is that as with the advent of the way India stack has got built and over the last 7, 8, 9 years, and it got strengthened, it's enabling us to reach out to the underbanked community in far more effective way. In whichever way one looks at the data, I mean, you look at the customer from whichever angle, whether you're in a financial services or a non-financial services, the way I look at a customer journey as a provider of goods and services, I look at it in 5 stages. Is how do you attract the customer? How do you make that proposition meaningful for someone to have a conversation with you? The second is how do you connect with them, which is your ability to establish contact with the prospect. Third is how do you engage. Fourth is how do you fulfill. And fifth is how do you deepen that relationship. And this is a contiguous circle. This circle, from a marketing perspective, keeping your customer at the center of plate of whatever product and services we want to offer, becomes the paramount. And I think there is no better with the fintech and the technology enabling us to do so effectively, efficiently, in a reliable and a scalable manner. I think that's the big part of it. And the part of that partnership is reflecting with what we are seeing with regards to co-lending, on-lending, with fintechs, NBFCs, banks, all participating. I kind of started my career in mid-94. We used to work for a large foreign bank called Citi. And large part of my career has been on the lending side. But when I plot saying, here is the 5 steps to the journey, and I look at it, the way we work with our partners, the net promoter scores of what we are seeing on our on-lending, co-lending, and partnership-based lending business is upward of 60s and 70s. And that promoter scores is actually unheard of. Those promoter scores is what Apple get, Walmart gets, IKEA gets, which are extremely customer-obsessed organization, or Amazon has. This means number of people who will prefer and refer you over and above anything else. And that's probably the best way to matrix the stickiness of customers. And I think that's the power what technology is able to do. And I'm telling it to you because we, in our own on-lending, co-lending tech stack called NPOS, we have an ability to underwrite about 4 loans per second. We do about 40,000 loans a day. That's the power of the platform and what technology is enabling us to do here. Sorry, long answer, but in a sense, put everything in context. Yeah.
Yes, yes. I think you have highlighted this India growth story, the India stack, and how this digital is enhancing and the speed of doing everything. So let me request Puneet to let's give your perspective on this.
Uh, Thank you, Ravi. I think Ashish has given a pretty good macroeconomic view to the query from Ravi. I'll try and go a bit granular. I mean, if we were to try and partner with the biggest fintechs, I'm talking about the biggest UPI players in the country, they have a huge customer base. Now, if I were to leverage that customer base to get leads on my platform, right? I have a simple question. Which model will we adopt? Will we simply ask a customer to come, provide his name, phone number, and drop a lead? Or I can ask him to punch in a bunch of details. I run my BRE and scorecard at the back end, and I give him a quick eligibility there and there. I tell him you are eligible for this much loan at this rate of interest. Both have their own pros and cons, right? The first one will give me a lot of junk leads. I will necessarily need to have a contact center calling up the customer, qualifying the customer. The second one, it's creating a lot of friction, right? The user has to come in, enter a lot of details. So where do you draw a line? Like Ashish mentioned, tech can enable a lot of things, but it's very critical we realize where are we putting a full stop to it. Just taking an extension to what he was talking about, the various segmentation. How will you talk about the customer journey on any NBFC platform, so to speak? We have prospecting, then we have sourcing. Once a file comes to me, we have underwriting. Someone is underwriting at the back end. Then we have disbursements happening. So each of these layers, if you see, tech has enabled a lot. On the prospecting side, I can give an in principle approval letter to the customer. I can give a real time approval. On the sourcing side, I have all the complete bouquet of APIs available. We have partners available outside as well who provide these services. An RM can walk in from that gate over there, and I can get an approval for my entire housing loan. I just need my mobile number. My Aadhaar and PAN can be fetched from DigiLocker. My bank statement can be fetched from account aggregator. Basically, I don't need anything. So the statements can be analyzed by Perfios. So just imagine the extent to which the technology has gone deep into this. Then I go further into underwriting, the analytics and AI models that are available today. They help me analyze the customer's profiling before I get a person to do it, right? And then on the disbursement side, again, there are multiple tech solutions available. The important aspect is while the tech today can enable everything, I think especially for heavy asset products like mortgage, it's critical we have a human layer built in over there. For light asset products, we can give a sanction and and deliver a credit card or a personal loan on the go. But for a heavy asset product like mortgage products, home loan, lab, where I come from, a human layer at the top, at the bottom, the distribution channel plays a huge role. Technology will not be able to solve everything.
Can I come in?
Yeah, yeah.
I'm a fairly obsessed mortgage person.
Yeah.
And, and I've spent a lot of time in my career in running mortgage businesses. Probably if you look around the world, the most sophisticated mortgage business is in Australia. And if we were to reimagine the way the mortgage delivery can happen, I think two big pieces, and now we are anyway seeing in some of the states, because property then becomes a state subject, and validation of the title docs, and the second is the valuation, which tends to become a massive issue. But I think a lot of tech stack can help solve that big part of it, correct? And I think that will help simplify the delivery mechanism dramatically. The second thing which I kind of seen, and I leave it to you if you think it's meaningful, is as you start entering the streets and the pin codes, and you're going down the pin code and going down the street level, you can set your own benchmark valuation numbers. That means for you to cross-validate, both to avoid fraud over LTV going up and so on and so forth, can be significantly addressed. And there are a bunch of tech companies who are trying to solve that issues. But I think it's about time for us to reimagine. There's a lot of it exists in many forms and fashion, but there is if all of us stay obsessed in ensuring that we are able to deliver effectively and efficiently without really blowing up the place and managing the risk, because risk is real. I think there is an opportunity because that's the leg which takes the maximum time. So in those days in Australia, this is like early 2000, you could actually do a drive-by valuation or a desktop stuff, which is pretty much close to what you will get when you do a detailed valuation, because they digitize the entire data record. So as long as you know the street and you know the pricing of the value of the street, it's very easy to do. I just want to leave that with you.
No, I completely agree with you, Ashish. I think that's a great perspective. You're talking about Australia. I think even in India, if you go to a premium segment or even talking about a salaried class, tech is available. If you go for an APA property, an approved project finance, or you partner with fintechs like Velocity, who have done the complete mapping for Indian properties as well, wherein for the underwriting, and I'm not talking about the individual underwriting, I'm talking about the home underwriting, the property, that is feasible. This works great for banks, for the top banks who are serving the premium customers. I specifically, at least my unique perspective comes from the affordable housing. I come from Hero Housing Finance. The average ticket size, and I'm sure there are many NBFCs over here who serve the affordable housing segment, and the average ticket size would, vary from 20 25 lakhs. And I always say everyone needs a home, right? I mean, the maid which comes to the domestic help that we have, the carpenter which comes to our home, everyone needs a home. The home may be slightly smaller, but they need a home. Over there, if you try to marry tech and try and evaluate customers and the property, becomes a bit of a challenge. Hence, while we would love to solve it, I think I feel like this is at least my view. We still have some time to go before we reach there, at least in the affordable housing, more on the interiors of India.
So I have a question here that there is a statement called NBFCs are becoming fintechs and fintechs are becoming NBFCs. So where is where to draw the line between the two?
Why there is no need to draw the line. Essentially, if you need to ensure, given this large country, for you to have access and customer to have access to money, and all of our objective is to drive financial inclusion. End of the day, at Northern Arc, we are very sectorally focused. We work on 6 sectors between MSME, MFI, consumer finance, vehicle finance, affordable housing, agri supply chain. That's the only sector where we operate. We would have impacted about 80 million lives, give or take about 6.5–7% of India's population, about 12–13% of India's underbanked population. That's a sizable amount of play. I think a lot of it, what we're seeing advancement is the marrying between the fintechs and the partnership with the regulated entities. And I think the way Reserve Bank of India has put these new DLG guidelines is actually brings a lot more clarity to the role and ownership of loan service providers and regulated entities. And I think as long as one able to follow it, you know that you're going to do justice to it. I think the reach is important. End of the day, the big issue, which, if you look back in 90s to 2000 to where we stand, your ability to have that reach is becoming powerful. And I think that commingling is, if we call it, is actually a good piece, because as long as regulated entities are able to hold and adhere, especially with regards to data, which is now becoming a very sensitive part, and I think we should be able to deliver to what we think is much needed, because the massive credit gap which exists, correct? NBFCs today have about 32 to 38% in these 6–7 sectors, which is the fastest growing impact sector. What is out? Infra is out, where most of the NBFCs have very limited or no play at all. And the real estate is kept out. But so in these sectors, I think you need to have the marrying of tech, because you have to reach individual households back in villages, helping them with rural housing and all of that. And I think that's important for, if both of them are able to partner and provide solutions.
There are a lot of compliance issues which are being focused, and especially the fintechs are under the radar. So how do you see this situation?
I think we all agree that in the interest of business, compliance cannot take a backseat. There is no two ways about it. India's regulatory bodies are pretty strong, and whatever guidelines have been laid out, whether it's banks, they're pretty heavy for banks, or for NBFCs, whether it's masking of Aadhaar, whether it's there are these recent DLG guidelines that have come up, whether you have to get the source code of your partners, whatever it is. I mean, I was working for a bank earlier, wherein for a limited KYC account, there has to be a limit in terms of how much money you can keep in the bank. If you have to do a full KYC, the customer had to walk into a branch. Fortunately, during pandemic, we had video KYC coming in. So I think all of us would agree there is absolutely no debate whether there is too much of compliance, right? If the regulatory bodies have decided something, we in the industry have to follow it and have to follow the rule of the law.
There is a like debate happening that
This is important.
over compliance is like leading to death of fintechs and stuff, or it's hurting fintechs. So is it like a true statement?
I think compliance gets you license to operate and conduct a business, period. I don't think there is anything more I can say on it. It is actually, if you look at it and you break it down, uh, uh, an outside in view as a even if I take an outside in view and say I have nothing to do with the regulated entity, what's regulator has pushed you for? Regulator has pushed you to be accountable. There's nothing wrong with it. The regulator is saying all the entities have to become far more client-centric or customer-centric. That helps you. Saying declare your pricing clearly. There's nothing wrong. I mean, this is what SEBI did with the mutual fund space, saying declare the commissions which you're making while selling mutual funds. This is what IRDA did on insurance. And I think it's about time that the banking regulator did the thing. The third thing they pushed you in the regulation is define the role between a service provider and a regulated entity, which to my mind is the right thing to do, and it's provided enough tailwinds for the business to scale up. And the fourth, they pushed you on data security. And I think all of those is actually what's happening around the world. And for regulated entities and for you to conduct this business, this is paramount, these things. Correct.
So what is the size of the what they call untapped market for NBFC or fintechs to like collaborate and open that new potential? Any estimates, any areas?
So I do not have the estimates right now, but today, if you see, NBFCs work largely on the distribution channel model, like it has been there for the banks, wherein you have the RMs on the ground, and they report to the sales managers, who report to an area business head, report to a regional business head. While that works great, the tech aspect over there will play a huge role, and the fintechs will provide a huge opportunity. Like McKinsey says, it's a low-hanging fruit which is available. Today, we are relying completely on the fleet on street to get the business, especially in affordable housing, that I can say. However, if you talk about fintech partners which are available, there is huge database which is available, which can be leveraged, wherein the leads can flow in directly. Paisa Bazaar and all these players, we are aware of what they have done, the way when they have partnered with all the key NBFCs and banks, right? So the leads come in, we tap on those leads, then we utilize the distribution channel which is available to us, and then we tap onto those. Today, what is happening, I think, from what I have seen, there is a limited reliance, at least on the affordable housing, on the digital data. There is a lot of relationships at play on the ground, and this is my experience. And they are the ones, whether they have relationships with builders or brokers or their local contacts, who get the business. On the digital side, if we get users to come on these fintech platforms and we get leads from there and we tap onto those leads, qualify them using our scorecard, there's a huge opportunity available out there. And I think if we talk about our NTC customers, it's huge, right? I mean, how many of my 1.4 billion population has a bureau, right? It's a huge opportunity. So like in 2014, we had focused on Pradhan Mantri Jan Dhan Yojana, wherein huge number of bank accounts got opened. I think this is a time when the credit, India is an underserved market, we all are aware of it, and credit is in huge demand. So it's a time, we're in 2024, to expand, get those NTC customers into ETC, and I think fintech collaboration will play a huge role there.
Your closing remarks, Ashish, on the uh, untapped opportunities for NBFCs and fintech collaborations. Like, what are the next big opportunities which are still untapped?
I think there is a massive demand across the sector. So obviously, delivering of credit in a responsible and reliable manner is to my mind, is the most critical piece. I think the second big piece which is coming up is this entire stuff on the climate, renewable, and sustainability. That's one of our 7th sector we will start operating in. We're launching climate fund. We're looking at the full multi-channel approach to the way we serve the sector. I think those two are becoming far more important. And ESG is becoming core to what we do. I think that's, to my mind, is core to it. My sense is the market is large. You have to be pretty reasonable. And the credit risks are real, correct? If somebody thinks there's no credit risk, there is a massive credit risk. We all live in a risk environment. And I think if you're able to manage the risk properly, there is enough growth opportunity and headroom. The fintechs are discovering new and new ways to reach and solve. There are enough problems to be solved on payments, correct? If you look at today's India stack, it's probably the best in the globe. With ONDC coming in, I think that will be a massive play. We just touched the tip of iceberg with GST. I think the GST is yet to be fully leveraged for enabling of credit to the small businesses. And then there's account aggregator. So there is a massive tailwind which India Stack is providing, and I'm sure all the financial regulated entities and the providers will lever it to deliver the access to credit to the underserved. Yeah.
Sure. I think we had some amazing discussion here. Really, I was interested कि ये session और लंबा हो जाए, but we have shortage of time here, so we will end it here. And I thank our panelists for joining us. Thank you so much.
Thank you, Ravi.